A very happy morning, happy afternoon, happy evening based on what time you're watching this video. I hope and pray that you guys are doing very well with your health and staying very safe, and also pray that all your near and dear ones are very safe and healthy. Friends, now let us enter into a very quick revision of your composition scheme, which is very important area of your exams. So when you talk about composition scheme, be rest assured that there will be a question about composition scheme in the exam paper for sure. Now composition scheme will be quickly going through. It's only, I totally believe that you've already gone through all the provisions. It is only for the purpose of quick revision, but I can assure that each and every point, even the point which is very minute point, very fine point, that will be discussed during the revision. Now quickly, which provision talks about your composition scheme, friends? It is section 10 which talks about your composition scheme. So section 10 is the base section. Now what are the rules? Rule 3 which talks about intimation, which means that if you want to enter inside composition scheme, you have to intimate, no permission, intimation. Rule 4 which talks about effective date, it will tell that from which date you are actually inside composition scheme. Rule 5 which talks about conditions and restrictions, which means that the moment you are inside composition scheme, or if you want to go inside composition scheme, you have to ensure that you satisfy all those conditions and restrictions. Rule 6 actually talks about your exit, validity of composition scheme. If at all you want to go outside composition scheme, or if you are not satisfying certain conditions of composition scheme, you will be thrown outside composition scheme. And rule 7, the rates of tax when you are inside composition scheme. Friends, you have to make sure that when you talk about entry inside composition scheme, it is your rule 3, rule 4, rule 5 read along with rule 7. Rule 3 talks about when you want to enter inside, knock the doors, intimation. 4, effective date when you are effectively inside the composition scheme. 5, conditions and restrictions which you have to ensure while going inside composition scheme and being inside composition scheme. 7, rates of tax when you are talking about composition scheme. And this rule 6, it is all about exit. When you are exiting the composition scheme, if you are not satisfying certain conditions or restrictions, or if you want to go outside voluntarily, you can go outside composition scheme. Now certain things that you have to understand when you are talking about composition scheme, that composition scheme dealer will be issuing a document called as bill of supply. Quickly connect to your document chapter. The composition scheme dealer will always be issuing a document called as bill of supply, because he cannot collect tax. A composition scheme dealer, on his purchases he cannot take input tax credit, on his sales he cannot collect tax from the customers. He has to pay to the government, but he cannot collect tax. So on his invoice, which is technically called as bill of supply, the document given by composition scheme dealer is bill of supply. He'll be writing composition scheme dealer and he's not eligible to collect tax on his supplies. Actually, he cannot collect tax from his customers, and he has to even print that on his bill of supply, that I am a composition scheme dealer, I am not eligible to collect tax on my supplies. He has to give that information on his bill of supply. So bill of supply will contain that he is a composition scheme dealer, point number 1. Second, he cannot collect tax on his outward supplies. And also it is very important to understand that when you are talking about your composition scheme dealer, on the name board, wherever it is, on principal place of business or additional place of business, whether you are talking about head office or branch office or principal place of business or your additional place of business, on every name board that a composition scheme dealer has outside his shop or godown or branch, etc., he should write that he is a composition taxable person. So when you talk about this particular point, what are they trying to tell? They are telling that he should mention on every notice or signboard displayed at prominent place, where not only at his principal place of business, but also at every additional place of business, that he is a composition taxable person. So that the persons who are entering inside the shop, they know that they are going to purchase from composition taxable person, who is not going to give them tax invoice, rather he is going to give them bill of supply, and who cannot collect tax on his outward supplies. So that person will pay tax to the government, but he cannot collect it from the customers. That is also another point that you have to remember, and both these points are given under your rule 5. Now friends, quickly talking about the scheme itself. Friends, your composition scheme is split into 2 parts. Right, one is normal composition scheme, which we call it as section 10.1, read along with section 10.2, and one is your special composition scheme, which is section 10.2a, which is your section 10.2a. So it will be divided into 2 parts, normal composition scheme and special composition scheme. But before we go inside your normal composition scheme and special composition scheme, first you have to understand that what is the threshold limit of normal composition scheme and what is the threshold limit of special composition scheme. Friends, when you're talking about the normal composition scheme, the threshold limit is either 150 lakhs. Okay, roughly you can understand that normal composition scheme is basically for goods and food related services. Small other services can be there, but it is basically for food, goods and food related, that is goods and food related services. Other services, small portion can be there. And special composition scheme is for those who cannot enter inside normal composition scheme. So if you want to talk about eligibility, we have discussed. When you talk about normal composition scheme, it is all about what? It is all about goods plus food related services. Can a small portion of service can be there? Yes, supply of services, a very small portion within the inner limit can be there. What is that inner limit? We'll discuss. Now basically I can write here, you're talking about goods plus food related services plus other services within the limit. Other services, there is a limit. There is a particular limit. It cannot be beyond a particular amount. It should be a very small portion. And obviously when you talk about section 10(2)(a), if you are not eligible to go for normal composition scheme, you are going under special composition scheme. Right. So here, yes, you can have, generally it is all about your services, where if I want to write here, you are talking about services, other services. Why I am writing other services? We are not talking about food related services, because food related services always goes under normal composition scheme. Restaurant and outdoor catering, these are food related services, they always go under normal composition scheme, right? So other services means services other than food related services. Other services always means services other than food related services, because food related services, which is restaurant and outdoor catering, will always be under normal composition scheme. Here other services is more than the limit, more than the inner limit. If other services is within the limit, you can try for normal composition scheme. If other services is beyond that limit, you have to go for special composition scheme. Now that is the introduction for normal composition scheme, special composition scheme, which I believe that you guys know. So when I tell normal composition scheme, goods, food related services, that is restaurant and outdoor catering services. Can there be other services apart from restaurant and outdoor catering? Yes, but within the inner limit. That's small limit. What is that limit? We'll discuss. But when you talk about your special composition scheme, it is other services basically, where other services is more than the limit. Can goods be there? Yes, goods can also be there. Only criteria that you have to check is it other services is beyond the limit. Small portion of goods or goods can be even there. So it is highly possible. Right. Now, when you talk about the normal composition scheme, friends, you have to understand the limit is 150 lakhs, 75 lakhs. Normal composition scheme, 150 lakhs, 75 lakhs. Special composition scheme, it is very simple, 50 lakhs. Right. But normal composition scheme, the limit is either it is 150 lakhs or it is 75 lakhs. Now friends, 75 lakhs is for whom? 75 lakhs is for whom? 75 lakhs is for a particular set of states. Now how to remember that states? Remember this mnemonics, for very simple mnemonics. Right. When you talk about apni politics means our politics. Apni politics in India can be summarized in 3 points. Now what are those 3 points? Right, for you to be a political influential political person in India, you can categorize that into 3 points, or you should have 3 characters. What is that? One is money, one is land, and one is Ram. One is money, one is land, and one is Ram. Now what are we trying to tell? Apni politics. When you talk about Apni politics, you are talking about Arunachal Pradesh. Arunachal Pradesh. Summarized: S, Sikkim; U, Uttarakhand; M, you are talking about Meghalaya. M, you are talking about Meghalaya. 3, you are talking about Tripura. Money, Manipur; land, Nagaland; Ram, Mizoram. So for politics in India, you require 3 things, isn't it? You require money, land, and Ram. Right, you are talking about religion. Money, land, and Ram. Though it should not be there, but that is a sad reality. Right. So Apni politics can be summarized. Right. If you want to know the summary of Apni politics, that is our politics in India, it is 3 important things you should have. One is money, one is land, one is Ram. Now, If you remember this mnemonics, you know all these. In case you are working in any of these states, right? It is 75 lakhs. It is 75 lakhs. Right? What are these states? AP, apni politics, Arunachal Pradesh. Summary, SUM. You are talking about Sikkim, Uttarakhand, and Meghalaya. Tripura. Money, Manipur. Land, Nagaland. Ram, Mizoram. Right? That is a very simple way to understand this particular point. Now, if at all you are not working in any of these states, it is 150 lakhs. So, normal composition scheme, it is 150 lakhs normally. But when you talk about certain, if you are working in any of these certain states, right, AP, some, Tripura, money, land and Ram, in any of these states, then it becomes 75 lakhs. But, when you talk about your special composition scheme, friends, it is always 50 lakhs. Your aggregate turnover in the preceding financial year should be within the limit. Aggregate turnover during the preceding financial year should be within the limit. So, for normal composition scheme, your aggregate turnover, you should see aggregate means pan India. Aggregate always means pan India. Though you are working under composition scheme, payment is always per state, but aggregate turnover is always pan India. Conceptual thing is always checked on pan India turnover. Your aggregate turnover in preceding financial year, if you are talking about normal composition scheme, it should be within 150 lakhs or 75 lakhs as the case may be. Now you know for what all states it is 75 lakhs. And if you are talking about special composition scheme, your aggregate turnover in the previous preceding financial year should be up to 50 lakhs. Whatever states you are working, no issues. So that special composition scheme is always 50 lakhs. But one more important point about special composition scheme that we have discussed is, you can go for special composition scheme only if you are not eligible for normal composition scheme, which means both are mutually exclusive. Only if the service limit, other services turnover is more than the prescribed percentage, only then you will think of special composition scheme. If other services turnover is within the limit, you cannot think about your special composition scheme. For special composition scheme, for you to enter, there are two parts. One, you should not be eligible for normal composition scheme. Second, your aggregate turnover in preceding financial year should be up to 50 lakhs, right? And here there is no categorization of states. It is for any of the state, it is always up to 50 lakhs. Now these are the points that you have. Now friends, you have to understand that there are certain conditions that you have to fulfill before you enter inside the composition scheme. What are those conditions? Very important conditions, right? So how to summarize that? So when I enter inside composition scheme, there is a doubt. There's a doubt with normally students, which all conditions are for previous year, which all conditions are for current year. So let us clarify the doubts with utmost clarity. When you talk about preceding financial year, the main condition is turnover limit, right? Normal composition scheme 150 lakhs, 75 lakhs, and when you talk about your special composition scheme, it is 75 lakhs. So normal composition scheme always is 150 lakhs or 75 lakhs. Special composition scheme is 50 lakhs irrespective of the states. Now there's one more condition that you have to see in the previous year is, what is that another condition? You should not be a manufacturer of notified goods in preceding financial year. In previous year, you should not be manufacturing notified goods. Now you may ask, what are the notified goods? What are the notified goods? It is PITA, P-I-T-A, P-I-T-A, it is PITA. Pan masala, ice cream, PITA, tobacco, aerated water. You should not be manufacturing notified goods. Should not be manufacturing notified goods. So in the previous year, you are going to see the aggregate turnover limit. One more condition that you are going to see about previous year is, you should not be manufacturer of PITA, pan masala, ice cream, tobacco and aerated water. Now all the other conditions that you have to see is of current year. All the other conditions that you have to see is of current year, that you have to remember. So what are the conditions that you have to see for previous year? Only two conditions. One is the threshold limit that you have to see, which is 150 lakhs, 75 lakhs for normal composition scheme and 50 lakhs for special composition scheme, irrespective of the states. Second is, you should not be manufacturing PITA, pan masala, ice cream, tobacco and aerated water in preceding financial year. That is true for both normal composition scheme and special composition scheme, right? Now other conditions are all of current year, So when you see these two conditions, you get an entry point. The moment you satisfy these conditions of the previous year, you can enter inside composition scheme, but you have to take care of certain things in current year. So now we are talking about conditions of current financial year. We are talking about conditions of current financial year, right? So here for current financial year, I have bifurcated the conditions into two parts. one for normal composition scheme and one for special composition scheme. More or less they are with the same. For normal composition scheme, you should not be making non-taxable supply of goods. You should not be dealing with alcoholic liquor and petroleum products, 5 notified petroleum products. For special composition scheme also it is the same. You should not be making non-taxable supply of goods or services. Friends, this point you need not stress much because the fact of the reason is this difference is there till your May 21 exams. Post that, for your November exams, November 21 exams, these differences have been removed, which means that even for normal composition scheme you should not be dealing with non-taxable supply of goods and non-taxable supply of services. Right, so it has become the same, but for November 21 exams. Obviously for May 21 exams, for normal composition scheme you should not be dealing with non-taxable supply of goods, that is alcoholic liquor for human consumption and 5 notified petroleum products. For special composition scheme, only one point is extra. You should not be also dealing with non-taxable supply of services. As of now, there is no non-taxable supply of services, but they have said should not be dealing with non-taxable supply of services. Then next point, you should not be making any interstate outward supply of goods. For normal composition scheme, you should not be having any interstate outward supply of goods. Right? Can there be services in normal composition scheme? Yes, but they are silent about services. I tell you the reason, because initially when the composition scheme started, it was only for goods, and restaurant and outdoor catering will always be within intrastate only. And moreover, I have said you a reason that for November 2021 exams, they have added services even for your normal composition scheme. So it is only a mistake or a negligence on their part, which is there for your May 2021 exams. So for normal composition scheme, you should not be making interstate outward supply of goods. For special composition scheme, you should not be making interstate outward supply of goods or services. So there should be no outward supply. Can I purchase from outside the state? Yes. Can I import the goods or import the services? Yes, you can have that. You can purchase from within the state or outside the state or outside the country, but your sale should be within the state. You cannot sell outside the state, or you cannot even export. Your outward supply should be intrastate. Your inward supply, purchases, can be intrastate within the state or interstate from another state or intercountry from another country. But your outward supply sales should be only intra-state, within the state. Your outward supply sales should be within the state, intrastate outward supply of goods for normal composition scheme. For special composition scheme, it is intrastate outward supply of goods and services. Can you make interstate outward supply of goods? No. For that is negative part. I can make only intrastate, so I cannot have interstate outward supply of goods for normal composition scheme. I cannot have interstate supply of outward supply of goods as well as services. Right. Next, the next point is you should not be making supply of goods through electronic commerce operator. You cannot supply goods. Again, here they are focusing only on goods. Through electronic commerce operator, see, can I supply goods through eco, that is online platforms? Basically yes, but if there is TCS, I cannot supply. So that's the difference. I cannot supply goods through eco where TCS is applicable. I cannot make sales through online platform where TCS is applicable. Can I make online sales can I make sales through an online platform where TCS is not applicable? Yes. So there are two conditions. I cannot make supply of goods through eco, that is online platform like Amazon, Flipkart, etc., etc., where TCS is applicable. But if TCS is not applicable, I can make sale. Right. Now, what is there in special composition scheme? Friends, it is the same, only thing as I am discussing, they talk about both goods and services, and that differences is only till May 2021 exam, because for November 2021 exam, even for normal composition scheme, wherever only goods is there, they have added goods or services, just like your special composition scheme. Right? Not supplying goods or services through eco where TCS is applicable. So this is a very important point. Normally students confuse here that I cannot make supply of goods or services through electronic commerce operator, that is online platforms. Not really true. If TCS is applicable, then you cannot have it. If there is no TCS, can I sell through eco? Yes. Right, that is the point that you have to understand. Next, you are talking about you should not be manufacturer of notified goods. Now this condition is both for previous year as well as current year. So in previous year also I should not be manufacturing notified goods, in current year also I should not be manufacturing notified goods. Now what are the notified goods? Same. PETA, Pan masala, ice cream, tobacco, aerated water. Now what will be there special in your special composition scheme? You should not be manufacturing notified goods as well as you should not be supplying notified services. Notified services. Now also that difference has been is there only for May 2021 exam, not for your November 2021 exam. So we are focusing only on May 2021 exams. Our focus is only on May. So you should, in normal composition scheme, you should not be manufacturing notified goods, both in previous year as well as in current year. In special composition scheme, in previous year it is only manufacturing notified goods. You should not be manufacturing notified goods, nothing about services. But in current year, you should not be manufacturing notified goods as well as not be supplying even notified services. No need to remember notified services because as of now there are no notified services. So forget about notified services. Simple language, you should not be manufacturing notified goods in previous year as well as in current year, both for normal composition scheme as well as special composition scheme. You should not be manufacturing. Can I be a trader of notified goods? A very important point. Yes, I can be trader of notified goods. Pan masala, ice cream, tobacco, pan masala, ice cream, tobacco and aerated water. I can be trader. If I am a trader of pan masala, can I go for composition scheme? Yes. If I am trader of ice cream or tobacco or aerated water, can I go for composition scheme? Yes. Only manufacturer is prohibited. Only a manufacturer is prohibited, and that manufacture of notified goods condition is both there in previous year as well as in current year. So that you have to remember. Right. Now other conditions are same for both the normal composition scheme as well as special composition scheme. I should not be a casual taxable person or a non-resident taxable person, which means I should not be going for business exhibition or trade fair. I should not be going to a particular state for business exhibition or trade fair for temporary purposes. I should not be a CTP or NRTP. Whether for a composition scheme RCM is applicable, yes, even for a composition scheme dealer reverse charge mechanism is applicable, right? And that RCM should be paid at regular rate, not at composition tax rate. So even if I am under composition scheme, even if I have certain inward supplies, say for example legal services from advocate, should a composition scheme dealer pay RCM for legal services from advocate on its inward supply? Yes. Is he going to pay RCM at composition rate, that is 1% or 5% or 6% or regular rate 18% or 12? He is going to pay at regular rate. So RCM is applicable even for a composition taxable person. And when he is paying RCM, he is not going to pay at lesser rate, composition scheme rate. He is going to pay at normal rates. Right. Next, you are talking about a point where when you talk about a composition scheme person, he is not entitled for ITC. I think I have discussed that earlier itself. On your purchases, you cannot take input tax credit, which means that you will not have any credit. And on your sales, you cannot collect any tax from the recipients, which means that I don't have any input tax credit on my purchases and I cannot collect any tax on my sales, which means that I have to pay tax from my pocket. I cannot collect. I have to pay tax. Normally indirect tax I collect and pay, but in this case I have to pay from my pocket and I have to always pay by cash ledger, electronic cash ledger, because I don't have anything in credit ledger, because I cannot have any input tax credit. Two different points. On my purchases, no input tax credit, so the credit ledger will always be zero. On my sales, I cannot collect tax from the customers. But should I pay? Yes, I should pay directly from my pocket. Right. And another important point, that 150 lakhs, 75 lakhs, 50 lakhs is even applicable for current year, which means can I be under composition scheme forever throughout the current year? No. I am allowed to be under composition scheme only till my aggregate turnover in current financial year is touching 150 lakhs, 75 lakhs or 50 lakhs as the case may be, which means I have to see this condition both in previous year and current year. Previous year my turnover should not be more than 150 lakhs, 75 lakhs or 50 lakhs as the case may be for me to enter inside composition scheme. So when I am entering, I should see that my previous financial year turnover should be up to 150 lakhs, 75 lakhs for normal composition scheme, should be up to 50 lakhs for special composition scheme, and only then I can enter. And when I enter, I cannot be under composition scheme for the full year till my turnover in current year is reaching up to 150 lakhs or 75 lakhs for normal composition scheme, or till it is reaching 50 lakhs in current year for special composition scheme. I can enjoy. After that, I will shift to regular scheme. Say for example, previous year is say 2021. So in my previous year 2021, my turnover should be up to 150 lakhs, 75 lakhs, 50 lakhs. If it is so, I can enter. If not, I cannot enter. Assume that it is less than 150 lakhs, 75 lakhs, 50 lakhs, I can enter inside composition scheme. Right, previous year is 2021, current year is 21-22, current year is financial year 21-22. Till my turnover is touching that 150 lakhs, 75 lakhs, 50 lakhs, assume that it is touching in December. Till then I can be working under composition scheme, and the moment it touches, I should go for regular scheme. So for January, February, March, I have to go for regular scheme. And next point, a very important point, if I am registered in multiple states, I cannot tell that, say for example, I am registered in 3 states, I cannot tell that I will go for composition scheme in 1 state and regular scheme in 2 states, or composition scheme in 2 states and regular scheme in 1 state. No. If at all I want to go for composition scheme, I should satisfy conditions of composition scheme in all these 3 states, and I should go for composition scheme in all these 3 states. A combination of composition scheme and regular scheme with the same PAN number, GST number will be different because state code will be different. Same company working in 3 states, same PAN number. I cannot tell that few states, a few registration numbers I will go for composition scheme, few registration number I will go for regular scheme. It is not possible. So composition scheme is actually PAN number wise. So if I opt to pay for composition scheme under section 10, it should be there for all the registration within the same PAN number. And if at all I am removed from composition scheme in any of the 1 state, I am removed from composition scheme automatically from all the states. It is better understanding. So if I want to go for composition scheme in all the registration on all the states, I have to go for composition scheme. And if I violate condition of composition scheme even in one of the state, which of the condition? I am removed from composition scheme not only from that state but also from other states as well. Right. So these are the conditions. Now conditions we have thoroughly seen each and every point. Only when you satisfy the condition and the restrictions, you can go for composition. Basically previous year points were all about your conditions. Right, you should be within the threshold limit 150 lakhs, 75 lakhs, 50 lakhs, not be manufacturer of notified goods in previous year. And in current year, these are all restrictions, which means that you cannot have a non-taxable supply of goods and even services for special composition scheme. You cannot make interstate outward supply goods for normal and goods and services for special composition scheme. You cannot supply through ECO, where TCS is applicable, goods for normal, goods and services for special composition scheme. You cannot be a manufacturer of notified goods, right? And supplier of notified services is an extra point for special composition scheme. You cannot be a casual taxable person, non-resident taxable person. Even if you are a composition scheme person, RCM is applicable for your inward supplies, and that too at regular rate, not at composition rate. And so moment you cross in the current year that threshold of 150 lakhs, 75 lakhs, 50 lakhs, you can enjoy composition scheme till then. Now it is not a condition, it is a restriction, because till then you can be inside, and after that you have to go to regular scheme. So it is not about previous year anymore, it is all about current year. Current year is all about restriction. It is not about can I enter or not, it is all about till how long you can be inside composition scheme. And composition scheme is always PAN based. It's not registration based, it is PAN India based. Now one point which is to be discussed here is, we discussed in the beginning that for normal composition scheme, it is food plus goods plus other services within the limit. And special composition scheme is when you are not eligible for normal composition scheme. Now what is that inner limit? What is that inner limit? For normal composition scheme, it is goods, food and other services within the inner limit. And special composition scheme means you are not eligible for normal composition scheme, which means that other services is crossing the inner limit. Now what is that inner limit? That inner limit for normal composition, it is only actually for normal composition scheme. If you are within that inner limit, be under normal composition scheme, or else think of special composition scheme, but you cannot go for normal composition scheme. Inner limit is 10% of turnover in the state or union territory of preceding financial year. Now inner limit is based on state turnover. 10% of state turnover, not aggregate turnover, state turnover of preceding financial year, or 5 lakhs, whichever is higher. So other services you can have up to 10% of state turnover of preceding financial year, or 5 lakhs, whichever is higher. So that is the maximum other services that you can have, assuming that 10% of your state turnover, assuming that your state turnover, you have to see that state by state, assuming that your state turnover in the first case, assume that it is the first case, it is say 75 lakhs, In the second case, assume that it is 35 lakhs. 35 lakhs. And the state turnover is of previous year. Now, what is the maximum service that you can have? Maximum service that you can have in current year. Maximum other services, not services. You are not talking about restaurant and outdoor catering because they are always under normal composition scheme. Maximum other services that you can have under current year for you to be under normal composition scheme. For you to be under normal composition scheme. Other services here is 10% of previous year turnover, which is 7.5, previous year state turnover, which is 7.5 lakhs, or 5 lakhs, whichever is higher. So it can be up to 7.5 lakhs. If it is 75 lakhs. If the state turnover in preceding financial year is 35 lakhs, it is 3.5 lakhs, 10% of state turnover, which is 3.5 lakhs, or 5 lakhs, whichever is higher. Here it is 5 lakhs. Right, that can be the maximum other services that can be there in the current year. So in the first case, maximum other services that can be there in the current year is 7.5 lakhs. In the second case, maximum other services that can be there in the current year is 5 lakhs. Maximum other services that can be there in current year. If it is crossing that, then you cannot be under normal composition scheme. You have to evaluate your special composition scheme. That is all about your conditions and restrictions, which means that you are talking about section 10 read along with rule 5. Now, let us talk about other small points where things are very pretty simple. Now, before we talk about all of these other small points, one important thing. So, when you are under composition scheme, what is the rate of tax that you have to apply? For your normal composition scheme, what is the rate of tax? For your special composition scheme, what is the rate of tax? For your normal composition scheme, if you are talking about manufacturer, the rate of tax is 1% of state turnover. Always payment is always based on state turnover. Always remember that concept is always based on aggregate turnover. Payment is always based on state turnover. 1% of state turnover. Yet if at all you are talking about your trader, other supplier is nothing but trader. Any other supplier is nothing but your trader. If at all you are talking about your trader, then it is 1% again of state turnover only, but only of taxable supplies. You are not going to include exempt supplies. For manufacturer, 1% of state turnover, both taxable plus exempt. For trader, 1% of state turnover, but only taxable portion. So if there are any exempt goods or services, that you are going to ignore. Then, if at all you are talking about service, what are the services that are allowed within the normal composition scheme? You are talking about your food related services, that is restaurant and outdoor catering services. It is 5% of state turnover. 5% of state turnover. Friends, who can all be inside normal composition scheme? It is basically manufacturer of goods, trader of goods, excuse me, and restaurant and outdoor catering services. For them, for manufacturer of goods, it is 1% of both taxable as well as exempt supplies of state turnover. For trader, it is 1% only of taxable portion of state turnover. For restaurant outdoor catering, it is 5% of both taxable as well as exempt portion of state turnover. Now you may tell that what about other services? If at all there are any other services, that other services will be a small portion, and that other services will be having the rate of that main item. Supposing if you are a trader and if you are having other services, for that other services it will be 1% of taxable portion. If you are a manufacturer, if you are having other services, for that other services it will be 1%. But now both of taxable and exempt portion. Now if you are a restaurant and if you are having that small other services, that other services will not have an independent rate. So restaurant along with small other services, it will be 5%, not only for restaurant but also for small other services. So that way you have to remember. And what is the rate for your special composition scheme? The rate for your special composition scheme is always 6%. 6% of state turnover. Again here it is both taxable as well as exempt portion. The only place where it is only focusing on taxable portion is trader, and that too when you are talking about normal composition scheme. So you have to split that: normal composition scheme, special composition scheme. Normal composition scheme, manufacturer, trader, food related services. Special composition scheme, any category. So normal composition scheme, manufacturer 1% of state turnover, both taxable and exempt portion. Trader 1% of state turnover, only taxable portion. Restaurant 5% of state turnover, both taxable and exempt portion. And other services will not have a separate rate. It will be it will be depending on whether you are a manufacturer or trader or restaurant. And when we talk about special composition scheme, it is very straightforward. 6% of state turnover, both taxable as well as exempt portion. And friends, these rates will always be CGST, SGST, which means if it is 1%, 0.5% CGST, 0.5% SGST. If it is 5%, 2.5% CGST, 2.5% SGST. If it is a special composition scheme, 3% CGST, 3% SGST. Why so? IGST can never be there, because if you are under composition scheme, you cannot have interstate outward supply. You cannot have interstate outward supply. So it is always CGST, SGST. That is all about the rate. Now, so we have seen when you can enter inside composition scheme, and you have seen what is the rate. Now what is left out? What is left out now is, what about your entry point and what about your exit point? When you are entering it, rule 3 read along with rule 4, 5 you have already seen. When you are exiting it, it is rule 6, rates rule 7. Now entry point. Now when you are talking about entry point, if at all you want to go for composition scheme, entry point is discussed in rule 3 read along with rule 4. Rule 3 read along with rule 4. Now let us analyze it. If at all you are talking about going for composition scheme, at the time of taking registration, so let us analyze it for new registration. First we will discuss about new registration, going for composition scheme at the time of taking new registration. So at the time of taking new registration, you can always go for composition scheme even if it is in between a year, which means that I am taking registration only in the month of June. So when I am filing the registration application, I can select that I want to go for composition scheme, right? A person who applies for registration may opt for composition scheme in the registration form itself, GST REG 01, right? And that itself will be considered as intimation, which means that in my registration form, I am telling that I want to go for composition scheme. Can it be in between of a year? Yes, it can be in June, July, August, it's possible. And what is the effective date in such cases? Effective date in such cases for new registration will be the effective date of registration, which means if you are applying within the time limit, if you are applying within 30 days from the date you are liable for registration, it will be effective date of registration will be date when you are liable for registration. And if you are applying after 30 days when you are liable for registration, effective date of registration will be date of grant of registration. So what will be your effective date of entry point inside composition scheme? Your effective date of entry point inside composition scheme, if you are applying within 30 days from the date you are liable for registration. If you are applying after 30 days from the date you are liable for registration. So if you apply within 30 days, effective date of your composition scheme will be date when you are liable for registration, right? That is past date, right? From the date you are liable for registration. If you are applying after 30 days from the date you are liable for registration, it means your effective date from which composition scheme starts is, it is date of grant of registration. Only from the date of grant of registration you are under composition scheme. Before that you will be under regular scheme, only from the date of grant of registration, right? So when you talk about new registration, we have completed the point of new registration. New registration, how to intimate that I want to go for composition scheme? Intimation is as per rule 3, effective date is as per rule 4. Intimation is in the registration form itself, tell that I want to go for composition scheme. Can it be in between of a year? Yes. And what will be the effective date from which composition scheme is there? If you are applying within 30 days, effective date of composition scheme will be date when you are liable for registration. If you are applying after 30 days, effective date of your composition scheme will be date of grant of registration. Now, what about existing registration? See, existing registration means you are talking about first you are under regular scheme, now you are going to composition scheme, which means you are already registered. You are working in regular scheme, now you want to go for composition scheme. Now in such a case you have to give an intimation, right, that you want to go for composition scheme. before the commencement of next financial year, which means if I want to go for composition scheme for financial year 22-23, I have to give that intimation before 31st of March 2022, before financial year 22-23 starts. If I want to go for composition scheme for financial year 22-23, that is 1st April 2022 to 31st March 2023, I have to give an intimation that I want to go for composition scheme before that financial year starts. I have to give intimation before 31st of March 2022. If not, forget about that entire year. Can I enter inside composition scheme in between of a year if I am already registered? No. If you are already registered, if it is not a case of new register, if you are already registered, you want to switch over from regular scheme to composition scheme, you have to give intimation. First point is you cannot enter inside composition scheme in between of a year because you are already registered. Second point, you have to give intimation before that particular financial year starts. And what will be the effective date in such a case? Beginning of financial year, which means if at all I give intimation that I want to go for composition scheme for financial year 22-23 on say 20th of March 2022. I have given intimation before that financial year starts. It will be effective only from 1st of April 2022, beginning of that financial year. Beginning of that financial year. Now, one more special point. If I am already registered, other things will also happen. Why? If I am already registered, it means that I am talking about regular scheme to composition scheme. In regular scheme, I can enjoy input tax credit. In composition scheme, I cannot enjoy input tax credit. So, after going for composition scheme, I have to do one more thing. I have to furnish a statement as per rule 44, which is for reversal of ITC. I have to pay ITC of the stock which is there as on the date of conversion from regular scheme to composition scheme, both stock of inputs as well as capital goods. And that I have to do within 60 days from the commencement of financial year, which means that after I enter inside composition scheme, that is 1st of April 2022, within 60 days, that is within 30th of May 2022, I have to reverse ITC on the stock of inputs and capital goods which was there as on 31st of March 2022 within 60 days. Within 60 days I have to do that. Now, one more interesting thing will be there. Supposing I am under composition scheme for financial year 22-23. I have done all these things. I want to continue composition scheme in 23-24. Should I give another intimation? No. If you are already under composition scheme, no need to give intimation. Only if you are under regular scheme, you have to give intimation. So, a fresh intimation is not required for each year, which means that once you are already under composition scheme, it will be presumed that you are under composition scheme even for the next year. When intimation is required? Only if you are under regular scheme and you want to go for composition scheme, intimation is required. If you are already under composition scheme and you want to continue for composition scheme next financial year, there is no requirement of your intimation. That is all about intimation and effective date, rule 3 and rule 4. One category is for new registration, one category is for already registered person, that is switch over from regular scheme to composition scheme. Now, we are talking about exit. Friends, exit is discussed in rule 6. Exit is discussed in your rule 6. Now, what is this rule 6 talking about? Now, this rule 6 is telling that how long you can be under composition scheme. Now, this exit is discussed in two parts. One part is when registered person is telling that I want to exit composition scheme. Second part, proper officer is throwing assessee outside composition scheme. One, assessee himself is going outside composition scheme. Two, proper officer is throwing the assessee outside composition scheme. Now, let us focus on the first part. Assessee himself is going outside composition scheme. Now, why assessee is going outside composition scheme? Any reason. Either he is not satisfying the conditions, therefore he is thrown out, he is going outside composition scheme, or he is satisfying the condition but he is not interested in composition scheme. Can he go outside composition scheme in between of a year? Yes. Coming inside composition scheme for an already registered person is not possible in between of a year. But going outside composition scheme, that is to regular scheme, is possible during a year. It's possible in between of a year. So, there are two parts. When assessee is going outside composition scheme, it may be because he is not satisfying the conditions, or he does not wants to be inside composition scheme. Assume that he wants to avail ITC. Now, assessee going outside composition scheme is again split into two parts. One, he wants to be under composition scheme but he is not satisfying condition. Second, he is not interested in composition scheme. Can he go outside composition scheme in both of these cases between a year? Yes. So if he is not satisfying the conditions of composition scheme, then he has to give intimation that he is not satisfying the condition within 7 days, which means that whenever the condition is violated, he has to give intimation within 7 days, and post that he is under regular scheme, so he can issue tax invoice, he can collect tax, etc., etc. So when he is not satisfying the condition, he is required to give intimation within 7 days. And what is the other category where assessee is not interested to go for where assessee is going outside composition scheme? He does not want to continue for composition scheme, he wants to avail ITC, or he is not interested for whatsoever reason. In that case, he has to give an application. It's not an intimation, he has to give an application before the date of withdrawal. Before the date of withdrawal. Right. So when he gives application, from that date he will be outside composition scheme. Now you may tell, what is the difference between these 2 points? When assessee is going outside composition scheme, in case of violating condition, whether he gives intimation within 7 days or after 7 days, he is outside composition scheme right from the day conditions are violated. But in the second case, where assessee is going outside composition scheme but is not violating any of the condition, only when he makes application for withdrawal, only from that date he is outside composition scheme. Again, there is a difference. First is, he is violating the condition, so now he has to give an intimation within 7 days. Now I am telling that whether or not he is giving intimation within 7 days, or say after 20 days or after 30 days, no worries. That is, he is not, whether or not he is giving intimation within the time 7 days, he is outside composition scheme right from the day he violated the condition. So if he has violated the condition on say 1st of October, whether he gives intimation within 8th of October or he is giving intimation on 20th of December, doesn't really matter. He is outside composition scheme right from 1st October. But in the second case, there is satisfying the condition, but he wants to go outside. Only when he is making that application for withdrawal, he is outside composition scheme. Now, this is the first part where assessee is going outside composition scheme. Now, second part is pretty interesting. Assessee is not going outside composition scheme. Proper officer is throwing assessee outside composition scheme. Action is taken by the proper officer. Now, can he do without principle of natural justice? No. First, he has to give show cause notice. So, proper officer has reasons to believe that either he is not at all eligible for composition scheme, or he is eligible but he has contravened the provisions in between. See, either he is not at all eligible for composition scheme ab initio, right from the beginning, or he was eligible for composition scheme but he violated the conditions in between, right? Now what assessee has to give? Assessee has to do, officer will give notice, assessee has to reply to the notice within 15 days, and thereafter officer will give order. Officer will have 30 days time. So first officer will give notice, assessee will have 15 days to reply, then officer will have 30 days to decide, to pass an order. Either accept the reply and tell that assessee, yes, you are well within your rights of composition scheme, you can continue for composition scheme, or deny the option of composition scheme, but it can be effective only from the date of event when the assessee made such contravention. Officer cannot always tell that you are outside composition scheme right from the beginning. Assessee is removed from the composition scheme only from that date when he violated the condition. Only from the officer cannot misuse his powers. So officer can remove assessee from composition scheme even retrospectively, even from an old date. But that old date is not always the beginning date. It is only that date when assessee violated the condition. So this point you have to understand. Now, whenever assessee is going outside composition scheme, it means that you are talking about composition scheme to regular scheme. It means earlier you cannot take input tax credit, in regular scheme you can take input tax credit. So what is the point that is mentioned now? A registered person shall submit the details of stock on the date when withdrawal is there, which means on the date when he is going outside composition scheme within 30 days. So when he is removed from composition scheme to regular scheme, whether he is going outside himself or officer is removing, within 30 days he has to give the details of the stock of inputs and capital goods so that he can take the credit. So that is point important to understand. And when he is removed from composition scheme from one state or one registration, he is removed from composition scheme from all the other registrations. So that we have already discussed. So if you are under composition scheme, you should be under composition scheme in all your registration number with the same PAN. And if you are outside composition scheme, even in one of the registration, you are outside composition scheme from all the other registration of the same PAN number. So that is all about your exit point. Now friends, last thing that to discuss under composition scheme is this point, turnover, what to include in preceding financial year turnover, what to include in current year financial year turnover. This is a chart that we have made, but I will make it more simple. For composition scheme, you should not include interest income anywhere. I am making this chart more simple. I am not going through this entire chart. I am making this chart very simple. Interest income, whether you are talking about preceding financial year, turnover, whether you are talking about preceding financial year turnover, what to include, what not to include, or whether you are talking about current financial year turnover, interest income is not at all considered. Interest income is not at all included, which means assume as if there is no interest income. Now you may ask, what are the categories? First, aggregate turnover for determining the eligibility. That is your previous year and current year, 150 lakhs, 75 lakhs, 50 lakhs. This is aggregate turnover, turnover of the state for your inner threshold limit. What is that inner threshold limit for normal composition scheme? 10% of preceding financial state turnover or 5 lakhs, whichever is higher. Also turnover for paying tax. There are three types of turnover here. One, aggregate turnover considered both for previous financial year for checking whether you can come inside composition scheme, current financial year to see how long you can be under composition scheme. That is aggregate turnover for determining eligibility under section 10, previous year as well as current year. One is aggregate turnover, state turnover for inner limit. When you talk about state turnover for inner limit, it has got nothing to do with current year, isn't it? State turnover of only preceding year. So in state turnover preceding year, you are not going to see interest. One is you are talking about payment of taxes, state turnover for paying taxes. So when you talk about state turnover for paying taxes, payment of taxes is always based on current year. So there is nothing to do with previous year. And whenever interest is there, even for payment, wherever interest is there, so the moment you see interest, don't include it. Do not include it. And in current year, till you are getting registration, forget about all the supplies. Friends, I am making this pretty simple. This is a chart where for revision it may help. I am making it very simple. You use three types of turnover here. One is aggregate turnover, both for previous year and as well as current year seeing 150 lakhs, 75 lakhs, 50 lakhs. In that, you see previous year as well as current year, there you don't include interest income. Include other supplies, both for previous year as well as current year. Simple. One is state turnover for previous year for seeing the inner limit, 10% or 5 lakhs, whichever is higher, which is there only for normal composition scheme. This point is there only and only for your normal composition scheme, not for special composition scheme. There you focus only on previous year, therefore don't even discuss about current year. In previous year, please ignore interest income. And other thing is you are talking about state turnover now for paying taxes. Now it is not for inner limit, it is for paying taxes. Now state turnover for paying taxes, payment of taxes is only in current year. So there also you ignore interest income. Friends, I will make it very simple. Any of these three turnover, aggregate turnover, previous year, current year, state turnover for previous year for that inner limit, state turnover for payment of taxes. These are the things. In all these cases, ignore interest income. Whether of previous year or current year, depending on the case. Focus only on other supplies. Interest on loan, ignore as if it is not a part of the question. So I am making things very simple. Look at the question as if interest income is not at all there. Interest on loan is not at all there. So it is only for composition scheme, my friends. It is not for other cases. Only and only for composition scheme. Interest on loans or advances or deposits, ignore it. Ignore it totally from the question, not only in the previous year calculation but also for the current year calculation, not only for aggregate turnover but also for state turnover. I will tell not only for previous year but also for current year. Not only for aggregate turnover, pan India turnover but also for state turnover. Ignore interest on loans, interest on deposits totally. So look at the question, remove that interest on loan previous years, remove that interest on current year, work out the question correctly. right? So wherever you get a question of composition scheme and there is interest on loan details of previous year or current year, ignore it in total. Should you do it for other cases? No, this point is only for your composition scheme. So this is very important for your practical question. So I'm repeating this again and again. For composition scheme, you don't take into calculation interest income whether of previous year or current year, whether while calculating aggregate turnover of previous year or current year, whether while calculating state turnover for previous year for inner limit or state turnover for current year for payment of taxes. You ignore interest income in total. Do we do this for all the other concepts? No, it is done only for your composition scheme. So that completely winds up your entire quick revision of your composition scheme. I hope all these points are pretty clear. Make sure that whenever for sure you're going to get a question for composition scheme, make sure that you don't make silly mistakes and get everything correct in that question.